Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, further UK rate rise is possible and likely due to the persistent inflation that we're seeing, is what the IMF predicts. As well as that, Israel pounds Gaza and prepares for a ground invasion as the third successive day of the conflict ends. As well as that, we've got lots to talk about on the charts. Lots is happening, especially in relation to gold and oil, which we'll come to near the end. As well as that, we've got lots of data coming out today, including FOMC minutes. But for the charts and the economic data, we'll talk about that near the end. So let's get straight into it. But firstly, future rate rise likely for the UK, IMF predicts. Now, the Bank of England may need to further increase interest rates as the UK continues to grapple with higher inflation than the UK's G7 peers, and this is according to the IMF's prediction, as set out an outlook that will provide a painful backdrop to the election expected next year. And this is kind of the issue which Rishi Sunak, the UK Prime Minister, has been dealing with a lot recently, is in relation to inflation. Now, he did promise, he did make it one of his key points that he was to halve inflation by the end of this year. And, that would be around the 5%, mid 5% mark. Currently, as we've just said, they are predicting that inflation will stand at 7.7%. By the end of this year. And so this is kind of a bad outlook for Rishi Sunak, who has the general election coming up next year. So it'll be interesting to see how that plays out and works to possibly Keir Starmer and Labour's favour. Now, IMF chief economist said in a press conference yesterday that rates need to rise another quarter point above the current 5.25%, warning of quite persistent levels of inflation. And this is in a contrast to the recent decision by the Bank of England to hold rates at the 5.25% mark, and this ended the consecutive rate rises that we had seen from the Bank of England. I believe it was 14 or 15 consecutive rate rises, which reached that 5.25% mark. And so when people kind of saw that they weren't raising rates this month, people kind of said, oh, okay, that's probably the top of their rate hiking cycle. Rates can only come down from here. And what the IMF chief economist is basically saying is, look, it may, the rate hiking kind of cycle may have paused for a second, but this is not the end. Inflation needs to come down, and it's not coming down fast enough, so rates will likely go up. And this was according to the IMF, who's in the latest World Economic Outlook. UK inflation will stand at 7.7% this year, dropping sharply to 3.7% in 2024. So they are predicting 7.7% for the UK's inflation by the end of this year, which is still significantly high. And this would be greater than inflation in other G7 nations, such as Germany, who is predicted at the second highest level of inflation, next year at 3.5%. So it's still above, the second highest inflation data coming from Germany, and so it's not looking too good for the UK. And this would make the economy a really tough sell for Rishi Sunak going into the 2024 general election. It wasn't too long ago that we actually spoke about Rishi Sunak's decision to cut a significant part of the HS2 line, which would have connected Manchester to Birmingham. And this came in a kind of group of many other policies which Rishi Sunak announced in a way to kind of bid himself as a change candidate. And this included what he'd said many months earlier on with stopping the boat, so restricting illegal immigration, as well as the key one, which is halving inflation. And so if he's not able to, achieve on that halving inflation target and persistent inflation remains, then essentially he's failing at one of his main goals, and so it may not play well for him in the elections. And we do know that Labour is leading in the polls at the moment, so definitely keep your eyes on that. Now, Jeremy Hunt, the UK's Chancellor of the Exchequer, did respond to the outlook by commenting that they say our growth, this being the IMF, will be higher than France, Germany or Italy in the long term. And this was in reference to the IMF's outlook report, which you can see on the photo below on the Financial Times. And Jeremy Hunt also commented on inflation by announcing that it will be a key point of his upcoming autumn statement. This is the kind of autumn budget, which the British government always, announces, and essentially he'll discuss his, economic performance and his economic policies going into next year, which will be a very key budget. So keep your eyes and ears listening in, for that budget announcement when it comes in the House of Commons. And now the high inflation data is despite the lower levels of growth that the UK is experiencing, with inflation only expected to grow by 0.5%. Sorry, not inflation, by the economy is only expected to grow by 0.5%. And this is kind of a situation of stagflation where the economy isn't growing and yet inflation is still, very persistent, very strong, and damaging the economy in many, many ways, with people essentially just losing money and not seeing any growth to the economy. Now, this is all in contrast to nations like Germany, whose GDP is expected to fall 0.5% this year. So some could argue, perhaps Germany's in a worse position. Their economy is declining, and they have the second worst, inflation in the G7. So only behind the UK, but at least the UK has some growth. So some could argue that because obviously any growth is going to be associated with inflation often, and so some could excuse that to some extent. Now, this all culminated in the IMF expecting rates to rise to 5.5% for the UK, as I've said, with Rishi Sunak making halving inflation to 5.5% as one of his key pledges, and the Bank of England keeping rates at the current level following the last meeting with the UK. At the last monetary policy meeting, doesn't bode too well for Rishi Sunak, which is really trying to get rates down. And, it is a really tough situation for the UK economy, it does seem. But that's all for, the article in relation to the UK. The next article to talk about really is Israel, which you've spoken a lot about recently for the past 2 days. It's been a very key talking point. And essentially the situation here is Israel continues to pound Gaza and prepares for a ground invasion. Now, Israel pounded the Gaza Strip and prepared for a ground invasion of the enclave, which we've been talking about for the past 2 days in relation to this kind of offensive or counter-offensive which Israel is planning on launching against Hamas, against the Palestinian people within Hamas, which recently, the Hamas and other, jihadist brigades did launch, terrorist activities within Israeli proper. Now, this is, as I said, coming 3 days after the attack by Hamas, which did trigger the bloodiest war on the country's territory for decades. And this was very significant, with many Israeli citizens just being massacred by extremists, essentially. Now, according to the IDF, Israel had hit more than 1,300 targets in Gaza in response to Hamas's attack, with 4,500 rockets being fired from Gaza. So a significant trade of missiles and strikes. If you've been following the news, you would have been seeing, lots of strikes landing in landing in Gaza, with these, strikes targeting, military infrastructure. However, as a result of military infrastructure being, associated and, kind of embedded with civilian infrastructure, for example, the tunnels which Hamas has built underneath, Gaza, does mean that whenever kind of Israel does try and strike anywhere which is the home to Hamas, essentially they're going to have collateral damage, which is obviously very, very bad, and very bad for Israel's optics as well. And so, yeah, it's a really tough situation. Now, as I said, a lot of these missiles that Israel is firing, as a result, it's causing casualties to civilian populations within Gaza, and many of the missiles coming from Gaza to Israel have killed dozens of civilians, including infants and children. This is all on top of the civilians that were massacred during the attack by Hamas. Now, the IDF now say that near the Gaza border, it was more or less secure, and they'd retrieved 1,500 Palestinians who had stormed the territory. And this is in contrast to what Palestine or Hamas is publishing, which is more around the 900 dead mark. So significant casualties on both sides, and a really, really devastating conflict which is taking place. And Israel, on the third day of the conflict, shelled sites in Lebanon. We did talk about this yesterday in relation to Hezbollah, and as I am going to say now, which this area is home to Hezbollah, which is the Iran-backed militant group, which is responsible for the rocket attacks. And this has kind of been happening over the past 3 days, but really, ramped up today. Now, Syria has also been identified as a staging ground for rocket attacks against Israel, and Israel has called upon 60,000 reservists, in addition to its record 300,000 already mobilized, and deployed 35 military battalions and 4 divisions as it builds up an infrastructure for future operations. And all those points kind of point to an ever-looming ground invasion of Gaza, which is becoming more and more likely. And we've been talking about this really since the start of the conflict, but it does seem ever more likely as the day passes, with Israel, accumulating more and more forces and more military infrastructure around Gaza's borders, almost in preparation of attacking. And with the increased airstrikes against Gaza's territory, it does seem that they're trying to wipe out military infrastructure before invading, which obviously will have detrimental effects not only on civilian populations, not only on Israeli people, and the soldiers, that will go up against one another, but also in the markets, and we'll come to that near the end. But this is especially true for oil, which is very dependent and kind of reactive to these times of world tension, as well as gold. But we'll talk about that near the end, as I've said. The Israeli bombardment has already displaced at least 200,000 people, and in turn, inadvertently killing 87 civilians. With Israel accusing the Palestinian group of embedding military infrastructure in civilian areas and religious sites. After Israel cut the water supply to Gaza, the UN warned it expected a severe shortage of the already scarce drinkable water, which would affect more than 610,000 people in the territory. So of course this is very devastating news. This would obviously be very horrible in relation to civilian populations, and yeah, so it would be not a nice thing to see, obviously. And Biden addressed the attacks yesterday, saying at least 14 Americans had been killed by Hamas attacks, also vowing the US would stand with Israel. And this kind of allows for worries to grow around possible escalation between the US and Iran. We know Iran's been funding Palestinian fighters, and the US is looking to arm Israel as well and kind of support them in any way they can, as we've spoken about across the past 2 days. As well as that, the US have moved a carrier strike group to near Israel, or at least are moving it, and so this kind of level of escalation obviously is a worry for many, as this could cause conflicts to spread beyond Israel and Gaza to neighboring territories such as Lebanon, which is already having its issues, Egypt, Iran, Jordan, Syria, and the US, obviously, with Biden also calling on Congress to increase aid to Israel. So we can only imagine, with this increased aid, these geopolitical conflicts, brewing, it's very likely that defense stocks, take an upturn, oil takes an upturn, and gold takes an upturn. But we'll come to that right now in relation to, the market. So let's take a look at the charts. So first to talk about really is, US indices, which is in a very interesting position. Now, we kind of did expect a bit of a sell-off following the issues within Israel. We did see that, but obviously since my first video not too long ago on the conflict, US equities have made a significant gain, and we thought maybe it will sell off from the 78.6% Fibonacci area, but instead it has pushed higher and formed a double top. Now it'll be interesting to see how it does react to this double top, whether price action shows it falling off from this level, or in fact it might consolidate or move higher. So keep your eyes on US indices as they approach this double top area, especially on the Dow Jones. Even for the Nasdaq, it's kind of approaching this area of liquidity that we've seen the US indices react to before, and it has wicked into that area. So definitely keep your eyes on US indices. They're in a very interesting position, but they're looking bullish at the moment. Now dollar, we were unsure on what might come of the dollar following the conflict in Gaza and Israel, but it does seem that we've seen a sell-off from the dollar. We had spoken about this kind of trend line, and we were talking about how it was likely that dollar would stay above the trend line, and it did seem to bounce off this area of liquidity, off this Fibonacci area, and off this trend line momentarily following the issues within Gaza. However, seemingly it's kind of sold off since then, and has returned to an area of liquidity, breaking below and retesting the trend line, and reaching a kind of area of liquidity. So it'll be interesting to see how the dollar does react, to these areas of liquidity going into many Fed officials' speeches today, as well as, the FOMC minutes, which will be published today. So very key US monetary policy kind of information, but we'll talk about that more so at the very end of the video when we go over the economic calendar. But next to talk about is Euro USD, still on the topic of the dollar, and similar to the dollar, which has reached an area of liquidity, so has Euro USD. It's reached this area of liquidity, has reached this area of liquidity, and this area of a double top. So it'll be really interesting to see how Euro USD does react to that. It's been trending downwards, very bearish for some time now, and seemingly it broke out of this area, this channel that was to the downside, very bearish, kind of retested it, and it's moved higher from there. Now it's reaching this area of liquidity, this kind of double top area. It'll be interesting to see how it does react from there, so definitely keep your eyes on that. But that's all to talk about for Euro USD. Next to talk about is USD JPY, which is kind of forming this flag here. As I spoke about yesterday, if we kind of write off this period, which was really kind of a false breakout as a result of some very volatile fundamental news, we are kind of seeing a bullish flag form where price has moved to the upside, and now it's kind of consolidated, trending downwards, retracing almost to the downside, but never being able to actually break below, with the body of a candle below this area of liquidity, below this once highest high that was made. It's never been able to break below that area, just wicks going below, indicating to us that there's a strong area of liquidity, strong area of support, and with this bearish trend line that's not in line with the long-term kind of upward momentum for USD JPY. It would be interesting to see whether it can break out going into today to the upside to move further in line with the kind of common price action analysis which people might make around this kind of area. So definitely keep your eyes on that. It'll be interesting to see how USD JPY responds to that area. But next to talk about is gold. So gold's in an interesting position. Obviously, we were talking about going into last week's NFP actually, how gold was in a really interesting situation around this area of liquidity that we'd marked out. if I can find it, yeah, there it is. It was in this really interesting area of liquidity, kind of consolidating, following the more hawkish rhetoric, which pushed down gold as a result of the hawkish rhetoric around, raising rates possibly later this year for the Fed. But since the invasion of Israel by Gaza and the kind of conflict which has ensued, we have seen gold react in a very bullish manner, as we did predict, due to the fact that gold is a safe haven asset. And so it's no surprise to us really that it does kind of respond positively in times of global economic conflict, and global conflict in altogether, and with tensions ever rising, and people worrying about escalating tensions, obviously people are going to try and accumulate safe haven assets, and this is kind of what we've seen here. And it does seem that gold is trending up now in this channel, so it'd be interesting to see where it can hit, maybe possibly reaching this prior high, this strong area of liquidity, which we could note is around this area where wicks have moved up into before. So it would be interesting to see whether gold does move up into that area, or it kind of reacts from maybe the 78.6% Fibonacci area, as we've seen here, where it did come up and kind of have a bearish reaction to it. So definitely keep your eyes on that. It'll be interesting to see how gold reacts in line with fundamental messages, especially with FOMC minutes coming out today, and any news which might come out from Gaza and Israel. So keep your eyes on that. But lastly, to talk about on the charts is US oil, which obviously we did talk about would take a rise following the invasion, just due to the lack of supply, which would be a result of this conflict with the Middle East being involved. It's likely that supply is cut off because oil rigs can't produce due to geopolitical conflicts, or maybe a certain nation stops exporting their oil to other nations due to geopolitical issues with that nation, and as a result oil did go up, both speculatively in line with those geopolitical kind of worries, but also in line with the cutting of supply which we did see near Israel. So we have seen that kind of push and bullish gap open for US oil and Brent crude oil. That said, it is now consolidating, failing to break above, especially on Brent crude, above this area of prior support. Something that wouldn't usually stand out, this kind of area of support, but it does seem to be failing to break above it. So definitely keep your eyes on Brent crude oil to see whether it can break above and possibly retest and move higher in line with the fundamental messages which are being seen at the moment. But lastly, to talk about obviously is the economic calendar. We have quite a bit of significant news coming out today. Not too much news, but the news which is coming out is very significant. So firstly, we've got German inflation rate. German inflation rate is the most important inflation rate within the Eurozone. It's the biggest economy. It has the most impact on the ECB's monetary policy. So definitely listen out for this data. It is forecast at 4.5%, with it previously being 6.1%. So they are expecting a great fall in German inflation, so definitely keep your eyes on that to see how Euro USD may react. As well as that, we've got new Chinese yuan loans, so listen out for that as well. And we've got 3 Fed official speeches. So we've got Fred Bauman, Fed Waller, and Fed Bostic. So definitely listen out for that to try and understand the Fed's rhetoric and differing opinions at the current time. As well as that, we've got US 30-year mortgage rates, so understanding the US housing market is obviously important. And as well as that, we've got US producer price inflation, so that's very impactful obviously both on US monetary policy and just understanding the US economy as a whole. And most importantly, at the end of the day, 7 o'clock GMT, we have the FOMC minutes being published, so definitely listen out for that to understand the US Fed's rhetoric even greater. But that's all from me today. That's all from us at Wildwood Capital. Hope you have a great trading day. We've spoken about a lot of articles, a lot of charts, and a lot of data coming out today. So yeah, have a great one. See you later. Bye.